Hello and welcome to S&P Global Ratings Fixed Income in 15, a 15-minute chat with a market voice and an S&P executive. My name is Joe Cass. I head up market outreach here in the UK. So this episode has a distinctive sustainable finance theme. I'm joined by Nicole Connolly, Global Head of ESG at Fidelity Investments, and Lauren Smart, Chief Commercial Officer at S&P Global Sustainable One. Thank you very much for joining me today, Nicole and Lauren.
Thank you.
Hi, Joe, and a big thanks to Joe and the S&P team for having me.
So before we start, just a very quick reminder that the views of the external guest on the show today are their views alone, and they do not represent the views of S&P Global Ratings. Okay, Nicole, let's kick off with some questions for you. Nicole, would you be able to give a broad overview of your background in the market?
Sure. So I have been in the markets for over 20 years, and most of that time has been at Fidelity Investments, where I was a fundamental research analyst on both the debt and equity side, and where I was a director of research managing teams of analysts across different sectors. And then I had 4 kids in my late 30s and in 3 years. And I came back from that last maternity leave after having twins and really found that I wanted to do more impactful work and really do work that would honor the lives of my kids and really all future generations. And so this idea of investing with the lens of achieving competitive returns while also generating positive social and environmental outcomes was one that really resonated with me. And on those social outcomes, I'm personally really passionate, as is Fidelity, about advancing gender equality. And that means, paving the way for future female leaders and also empowering women to make good investment decisions, to get them more excited about investing, to take control of their finances. And so that was part of the genesis of our Women's Leadership Fund, which I manage and which we launched that 2 years ago. I also wear the hat of Chief Investment Officer for our ESG effort at Fidelity, and over the past 3 years have helped lead our ESG efforts, which has involved launching ESG ratings for every company that we cover, putting more ESG funds into the market, and really making sure that even for our non-ESG funds, that those fund managers are incorporating ESG factors as part of their investment mosaic. And then lastly, this past June, launched a U.S. sustainability equity fund with my colleague Mike Robertson, where we look for companies that have that stakeholder mindset, that have embraced environmental, social, and governance principles so that they can be built to last and potentially outperform over time. So we've been busy, Joe.
So Nicole, what big picture ESG and sustainable investing trends are really front of mind at Fidelity Investments right now?
Yeah, so one thing that we're really excited about is the power of active management in this field of ESG. And if you look back to the flows into the ESG space over the past 2 years, it's been about $100 billion in the US has gone into ESG funds, and 70% of that has been into passive funds. So we're, really excited as, one of the largest active managers to bring our in-depth research capabilities, to bring our access to management, our data resources where we can find the best ESG data, to bring that, to the market. And also when you think about asset classes outside of like large cap equity, and you think like emerging markets and high yield and small cap, these are asset classes where there's very little ESG disclosure and where you need that human judgment to engage with companies and to do the hard work of figuring out who in those asset classes are the ESG winners. And if we think more about like actionable investment themes today, obviously we're really excited about climate and the long-term investment opportunity that we think is present in climate. This filming of this podcast is timely because it's happening at the same time as COP26, which is the 26th climate conference that the UN is sponsoring, and exciting to see headlines around pledges to cutting methane emissions and reducing deforestation. But we think between greening our transportation system, greening the grid, greening our homes, greening manufacturing processes like steel and cement, that there are, a number of different investment opportunities, companies with exposures to those themes. And so we've launched a global climate action fund and an environmental bond fund. We launched those funds in the spring, which are run by longtime Fidelity fund managers. And then another investment theme would be water, where 2 billion people across the globe do not have access to clean water, where the demand for water is far outpacing the supply of water given population growth. And so we launched a water sustainability fund to invest in companies that are trying to solve that, crisis, the water crisis, and that's run by Janet Glazier.
Great stuff. Thanks, Nicole. So Lauren, many people watching, many people listening may not be aware of our new Sustainable One division here at S&P Global. Can you give us an overview of what S&P Global Sustainable One is, what it's looking to achieve, and who it's looking to serve?
So Sustainable One was launched in April of this year, and it's really with the overarching goal to provide a single source of sustainability intelligence to our clients across all the different divisions. So S&P Global is hugely committed to ESG and climate, and we've been developing offerings within each of our divisions. So that's S&P Global Ratings, S&P Global Market Intelligence, Platts, and S&P Dow Jones Indices. And so what we are hoping to do with the Sustainable One group is to provide an overarching cross-divisional approach to providing our clients with the appropriate S&P Global sustainability solutions that meet their needs. And also we're doing things like podcast programs, webinars, events, and creating a whole suite of learning materials for our clients that will help them in terms of learning about what S&P Global can do to meet their needs from a cross-divisional or division-agnostic perspective.
Fantastic. So, Nicole, what role do you think large investors will play going forward in terms of ESG stewardship of the companies they're investing in?
Right. So I think sometimes people conflate, stewardship success with the amount of times an asset manager has voted against management. And so, we think about it like the barometer of success is really, did you vote in a way where you got, information that allowed you to make better investment decisions? And did you vote in a way where you encourage companies to take action in a way that would make them better investments longer term? And so we look at shareholder proposals and our ESG engagements through that lens. And, as an active manager, we think one thing that's differentiated about us is that, we have both the carrot, the ability to invest in a company, and also the stick, the ability to divest and or vote. And I think that differentiates us from a passive player where their buy or sell decisions are basically dictated by the holdings in the benchmark. And so maybe to bring this alive, I thought I would share an example of where we engaged with a company on an ESG issue, which was pay gap, specifically focusing on how women are getting paid versus men, and how people of color are getting paid versus their white counterparts. And we talked to a company, a large cap tech company, who was doing the pay gap analysis, which was good, but they were not including equity as part of the compensation assessment. And, the Wall Street Journal recently reported actually that, 24% of male employees own company stock versus 17% of female employees, and that the company stock owned by men is about 4 times as valuable as what's owned by women. And so we really think that equity and, bonuses and base should all be part of the compensation analysis. And so we shared that view with the tech company, and then a year later they disclosed that they had added equity as part of the compensation and really thanked us for the feedback. And so those are the types of conversations we're having with companies across the entire ESG spectrum.
Great, thanks for sharing that, Nicole. Lauren, there is a lot of ESG data out there for investors and the market generally. So what kind of ESG are you hearing is the most valuable and why?
So it really depends on the use case and what that data is being used for. As a general theme, we're finding that deep information about climate change and net zero in particular is a hot topic for clients, and an area whereby expectations have really gone up in terms of what investors should be producing. That speaks to their net zero goals and ambitions. So definitely climate change, scenario analysis, how to do that, how to measure, monitor and track against net zero. That's a really key area. But there are all sorts of additional areas as well where we're finding are increasing in importance, and diversity, equity and inclusion would be an example of that. And areas that were previously very difficult to gather information on, and Nicole highlighted this in terms of gender pay gaps and information like that, which is more important increasingly going forwards too. But also, if we just to pivot to types of data that can be created rather than disclosed. So if a client's got a very large portfolio of maybe private companies or of companies that are SMEs, then they may not be disclosing information. So being able to provide information to fill that void is really important as well, and it's an area where we can impute what the likely environmental or social governance risks or impacts might be. So that's an area where I think the market is really asking and demanding from data providers to provide more information. And then maybe finally, we're seeing a way of looking at ESG through different lenses in terms of the question. So what is the question you're seeking to answer? And then therefore, what's the data? So some clients are very, very, very focused on what's the positive real world impact of a particular ESG data point or score. And that the kind of information that would answer that type of question would be quite different to what is the financial risk. And even then, within financial risk, what you might be interested in from an equity perspective would be different to a credit perspective. So really beginning to drill into what's the question we're seeking to answer, rather than expecting one monolithic ESG score to be the answer to every question. So I think we'll see a lot more sort of lenses in terms of financial risk, in terms of impact, and in terms of management of exposures as well, being asked for.
Great, thanks,
Lauren. And one thing to add to what Lauren's talking about, which I think will help us all as ESG investors, is that the SEC looks like it is going to mandate more climate disclosure from companies, which will be, of huge help, and also human capital management disclosure. So better workforce disclosure, better pay gap disclosure. So I think more data is coming. Which will be great for investors and great for companies like S&P to help us sort through that data.
Absolutely. So Nicole, in your view, what does ESG and sustainable investing look like in, say, 10 years from now?
Yeah, so I think the holy grail would be if we're not making this distinction between ESG and non-ESG, because 10, 15, 20 years from now, like every company is on its way to meeting its net zero goals. Every company has a workforce whose composition reflects the customers they serve. Every company has a board of directors who's making a positive influence on the company. And to kind of bring this home even more, I like to say, if the S&P looked like the Women's Leadership Fund, we'd have 160 more female CEOs. We'd have, 100 more female CFOs. We'd have twice the number of boards that had 30% female representation. We'd have, women and women of color making, a fair compensation versus their male and white peers. And wouldn't that be a world that we would want, our children and our grandchildren to work in? So that's hopefully, we'll put ourselves out of a job, Joe and Lauren. Saying that tongue in cheek.
Fantastic. Thanks, Nicole. So now we're going to move on to some non-market related questions. So Lauren, I'll start with you. Pre-pandemic, back in 2019, you gave a speech at Davos at the World Economic Forum on the future of finance. So firstly, what was the experience like of speaking at Davos? And secondly, have any of the discussion points from your speech come to fruition already?
That's a great question, Joseph. So it was fabulous speaking at Davos. It was cold. It was very snowy. It was very busy, but it was really interesting to have that opportunity to speak with so many decision makers. I was on a panel. We were talking about the future of finance, what finance looks like in 5 years, 10 years, 30 years time, and my answer to what does success look like is actually almost exactly what Nicole said. Success looks like there is no such thing as sustainable finance, that it's just how finance is done. And I also said, if I'm out of a job, that's probably a good thing. It means that we've reached that goal. So I'm still in a job, thankfully, which probably means that we haven't yet got to that point whereby sustainable finance is finance and how it's mainstreamed. But I can clearly see that even over the last 2 years, we've made extraordinary progress in terms of mainstreaming finance, mainstreaming sustainability and ESG into finance. I think the commitments that have been made around net zero, and the breadth of those commitments from a whole range of different financial institutions globally, of different sizes and geographies, is extremely encouraging. But we now need to take the commitments and put them into action. And we have a lot further to go yet before all of finance is sustainable finance.
Sure. Nicole, work-life balance has become increasingly important for many people over the past kind of 18 months, really. So you mentioned previously that you had 4 children in a 3-year period. I wanted to pick up on that. So do you have any tips when it comes to managing a career plus a family plus kind of personal health while still remaining sane to a point?
Yeah, it's a lot. I think it's all about the people you surround yourself with and building a great team. And, on the home front, I have a great partner, husband who works, but is so involved and such a great resource for me and the kids. We have an amazing nanny who's been with us since the beginning. And then we convinced my parents to move to Needham in Massachusetts, where we live. So it really does take a village, and I've been very lucky to have a great team to raise these kids. And then professionally, to also have an amazing team, right? To have people that you're excited to work with, that you trust. And so we've got a fabulous ESG team at Fidelity, as well as our fundamental research analysts who are real partners in advancing our ESG work. So I'm very lucky to be surrounded by great people. And that would be my advice as well, to try to find any way to take time for yourself. I bought a Peloton, probably like everybody else, at the beginning of the pandemic, and try to be pretty disciplined about doing that every day. And then like reading and meditating, I find are also, great outlets to keep me sane. So those would be my tips.
No, sounds good. So Lauren, you completed your undergrad at Cambridge and your master's at LSE in anthropology and archaeology. So do you still have a passion for these topics, and is there a hidden archaeologist in you just waiting to get out there in the field?
There is a hidden archaeologist and anthropologist in me, for sure. There aren't that many archaeologists and anthropologists in finance, and there aren't that many finance people in archaeology and anthropology. I think there needs to be more. I think there's also there's a lot of value when we think about archaeology and anthropology through the finance lens as well, because it's very multidisciplinary. So when we think about sustainable finance, the challenges of sustainable finance can't be solved by one sort of skill set. We need to understand the science, the legal situation. We need to understand the finance situation. We need to understand the behavioral side of things as well. And the area I specialized in was the evolution of humans, how our brains evolved. And I think that when we look at some of the barriers to the success of sustainable finance, some of it is very much down to behavioral finance. Like, we don't believe there's any such thing as a free lunch. So why you there surely has to be some sacrifice. There must be some sacrifice in returns if we're incorporating sustainability, which doesn't actually make much sense when we think about that from a logical perspective. Why would a company that is better managed, more resilient, doesn't have forced labor in its supply chain, why would these companies be worse? So there are definitely, in my opinion, behavioral blockers that are inhibiting the success of sustainable finance, and that are inhibiting the ability for it to mainstream. And I think actually bringing lots of different people together with different backgrounds, academic backgrounds, and different ways of thinking is part of the solution. And also one of the things that makes sustainable finance such an interesting area to work in, because there are so many people who are in this field with very diverse backgrounds, academically, professionally, and that makes for an extraordinarily stimulating environment.
So maybe Nicole, just to add to Lauren's commentary
sure.
about performance and like debunking this performance myth about investing with a sustainability lens. You know, we looked at 7 years of ESG ratings and how those ratings performed, and we did find that companies that had high ESG ratings outperformed the market by about 1% a year in each of those 7 years, and this builds upon evidence that George Serafine from the Harvard Business School has done an assessment looking at companies going even much further back than 7 years. So I think as people start to really digest this research, that myth will be permanently debunked, and as Lauren said, will kind of get rid of one of those key barriers to this type of investing.
Absolutely. So, Nicole, the last question goes to you. On Fixed Income in 15, this podcast, I usually interview leaders, influential individuals from the world of finance, economics, and beyond. So who would you recommend I ask to be a guest on a future episode of the show?
Yeah, that's such a fun question. So data privacy, internet platform safety and health is so topical right now. And we had an amazing speaker come into Fidelity, Shoshana Zuboff, who wrote The Age of Surveillance Capitalism, which is an incredible read. And for anybody who's invested in internet companies, she's just a must listen to. She's thought-provoking. She's been researching this area for years. And I think she'd be great for your listeners.
Great. So that's all we have time for. So my thanks to Nicole and Lauren for your time today. It's been great to hear your views. Thanks to everyone watching and listening, and see you next time on Fixed Income in 15.